Been listening to the Morgan Housel podcast. That is Morgan Housel, the author of Psychology of Money. He has started doing it comes because he found out that his audiobook has way outsold his actual book. So he was like, whoa, there's like a market for my text being read to people, essentially. Do you know what I mean? So he has tried a podcast and he tried an episode and he said, look, I promise you nothing at all. You know, this might be the only episode that I ever do. Let's just see how this goes. Anyway, about 4 days later, Steve, there was another one. And 4 days later, there was another one. And now he's on episode 5 and they are fantastic. They're just little tidbits of his little sort of brain farts that he'll come and he explains them in a way that Morgan Housel can only explain. Now, I wondered why he was doing it right now. His book's been out a couple of years, and it turns out that he actually has a new book on its way as well. Yeah, so Morgan's new book, I think it's due out in November. It's called Same as Ever, and it's a guide to what never changes. So there's not a lot of information about it, seeing he only really announced it this week. But there's some really interesting tidbits of information in there, especially for people who love cars. And in his podcast, he comes out with this cracking line, and it's in his book as well, to be fair. But he says, think back to the last time that you saw somebody in a Ferrari or you saw a Lamborghini or something like that, and what colour was it? And you can always think, well, yeah, I remember the last time I saw that red Ferrari that was driving down wherever it was. And he says, now, what did the driver look like? And you're like, oh, yeah, you know what I mean? Like, I tried this with the Junior. So we was driving to site, and he's really into his cars, and he saw this really fancy Audi, some kind of electric Audi drive by, really nice looking car. And he said, wow, that car is gorgeous. I'd love to own one of them one day. And I said to him, was the driver black or white? And he looked at me and he went, I don't know. I didn't look at him. And I said, see, that's the thing. When you buy a car, you're sort of outwardly projecting, look at me, I'm so cool, I'm in this fancy cool car. And I said, you didn't even realise what he looked like. You didn't even realise, one of the most basic facets, the first thing that people spot. So he was sort of, I thought I had a good thought about that. But that all comes from the Morgan Housel podcast, and it actually comes from him being I think they call him a bellboy in America, but essentially it's the people who stand outside the hotels and drive the cars to your it's all valet parker. And it came down to him driving a load of fancy cars, but then actually when it came to the guy collecting the keys, he couldn't tell him whether it was his car or not. So yeah, it was really interesting. It's got loads of little tidbits of information in there. He even manages to weave in a story about people racing around the world, the first ever sailing around the world thing. So really interesting, Steve. How about you? What have you been listening to?
Hey, nice catchy name, that book, actually. I'm planning on having a listen to the Morgan Housel podcast. It sounds like if you're recording... I wish I could able to record stuff every 4 days and have it be worthwhile. I think I'd probably say one worthwhile thing every 4 weeks, but I guess that comes with experience. So when we're retired and doing this, and we're 30 years from now, we'll be saying this kind of stuff, and the same people will be listening, hopefully. That would be nice. I've been listening to a podcast called The Memo by a guy called Howard Marks, and the main reason I've been listening to it is because you told me to. So Howard Marks, for anyone who doesn't know, I'll just say a little bit about his kind of background, because he's not someone that we've talked about on the show before, I think, at all. We've mentioned Morgan Housel, and we've certainly mentioned Psychology of Money a few times as a kind of reading recommendation or thing we've appreciated. And we had Chris Hill on, who was narrating that audiobook. But Howard Marks is the basically chief of Oak Tree Capital, and his podcast is called The Memo. And what it is a combination of ideas from his historic letters to shareholders, I guess, and kind of more recent looks back at some of the things he said there and thinking about how those ideas relate to share prices, macroeconomic events a little bit, but he's kind of sceptical about the value of thinking about those too much, and in general the way the market's behaving today. So just his background a little bit then, because this kind of informs a fair bit of what you hear. Both you and I like him very much, this kind of podcast. He's known as, at least on one YouTube channel that I saw, the Vulture of Wall Street, because he basically made his real killing in distressed debt. One of his kind of things he did really well on was a company called Regal Theatres. So his idea was that Regal Theatres was in deep trouble, and its bonds were roughly plunging. And the thought he had was, well, look, this is a cinema chain, effectively, or a theatre chain. it owns a lot of kind of hard assets. So if this company does go into, one of two things happens. Either this company goes to bankruptcy or this company survives. If this company survives, then I'll convert the bonds to equity and away we go. I'll be doing pretty well. If the company goes bust, well, they'll just sell off all those kind of assets and I'll get most of the money I'm due on my debt because I'm a bondholder. I have an early claim on on anything that comes out of that liquidation. Anyway, long story short, he made an absolute killing. And that's kind of what one of his most famous kind of moves. He's done very well in the kind of junk bond market, I guess. Where he's done less well, or at least historically done less well, when he kind of began his Wall Street career, he was part of the kind of think tank behind the so-called Nifty 50, which was a collection of 50 stocks, which were basically so good and whose prospects were so impressive that you simply could not overpay for them. They were just worth it at any price. They became kind of pretty much untethered from their earnings in what we would call bubble territory, and they roughly went down 90% after he finished recommending them. So he kind of has a couple of different principles from this, but the memo is his extremely successful kind of, I guess, reflections on markets and so on. And I know you've been listening to these as well, Steve. You put me onto them. You like these an awful lot, right?
I do, yes. So I was put onto them by the Investor Way, so that I've got to pass the credit on here where it is, and I'd still put it off from listening to it until a couple of weeks ago, and I started listening to them, and essentially I thought they were just going to be Howard Marks reading his memos to me, which is fine, but I mean I read them myself, so I don't really need them to read them to me. But there's so much more than that. He adds to the paragraphs. He sort of like expands points if he feels like he hasn't done it well enough, and even sometimes he has like Q&A sessions with his lead writer, which helps draw more out of the text than usual. And he even has guests on. He had the Brookfield Asset Management guest on one of the most recent podcasts, and that was quite embarrassing, I thought, for Steve, because Howard completely outshone him. It was like he knew so much more about everything, and he kept trying to sort of like pass the mic, and it would just get swiftly passed back with, well, you say this better than me. And it was kind of like, well, he didn't even mean to kind of upstage him, but I think it was a fairly poor showing, but an excellent podcast nonetheless. But yeah, there's been things I love in there. Like I've just pulled this saying out, Steve, for you that I was trying to remember off air, but I found it while you was introducing. So he says, when I was a boy, there was a popular saying, don't just sit there, do something. But for investing, you need to invert it. Don't just do something, sit there. Develop the mindset that you don't make money on what you buy and sell, you make money on what you hold. Think more, trade less. Make fewer but more consequential trades. Over-diversification reduces the importance of each trade, thus it can allow investors to take actions without adequate investigation or great conviction. I think most portfolios are over-diversified and over-traded. It's just, he can get that across to you in such a beautiful way.
He can, and it's a feature of his memos, I think, and I think it's a strength of his memos that this is the kind of content of one of them, but they mainly say the same thing. They just say the same sort of thing applied to different times. If you want someone who kind of has a kind of set bunch of principles that he just figures out how they apply at this point in time and this point in time and this other point in time, this is a really good example of someone who has their way of thinking about markets very clear in their own head. So my kind of selected highlight was basically him saying the same thing as yours. He's talking about something called the factory of the future, as he calls it, in his memo called What Really Matters. And he says, look, the factory of the future just contains one man and it contains a dog. And the dog's job is to stop the man touching anything, and the man's job is to feed the dog and keep the dog alive. Which is, I think, kind of great, basically. And he thinks investing should work the same way, right? The point of this show is more or less, Steve and I exist in a symbiotic relationship where one of us feeds the other one, or we each feed each other and then each stop each other doing stuff in the stock market, except we don't. We talk about gusto recipes far too much, and we just egg each other on into over trading and over diversifying our portfolios. But Howard Marks has these really nice ways of putting stuff, right? He's got these kind of set of principles, which, as far as I can tell, come down to you have to be different to the market. You will only get a better result than other people if you do something different to what other people are doing. you will achieve the same thing if you do. And this is a fairly straightforward thought, but it's a kind of really foundational one for him. If you do the same thing as everybody else, you will get the same result as everybody else. And that might be fine. But if you want a better result, you have to do something different. One of the things that really stands out to me and speaks to his background, I think, is this idea that everything has its price. He thinks, so think about the Buffett line of it's better to buy a wonderful business at a fair price than a fair business at a wonderful price, or a great price, or something like that. Howard Marks, I think, probably disagrees with that. I think he thinks that if you pay low enough, there is a kind of business that's really, really bad, but you can pay under in it and it will be great. And that's more or less his lived experience from dealing in junk bonds, right? These things are not good investments. They, in the words of Moody's, I'm going to read his whole damn memos to you at this rate, but they lack the qualities of a desirable investment. And his thought is, well, they might do if you pay too much for them, but if you get them for sod all and they come through for you, then they absolutely have the qualities of a desirable investment. It depends, he thinks, on what you pay. His book is called Mastering the Market Cycle, and it basically preaches the virtues of being patient and buying when sentiment, which is a big kind of thing, is falling towards pessimism, either in stocks in general, which it sometimes is, or in particular areas of the stock market, I guess, which it sometimes does. So I guess that's how I sort of think about this, but I really enjoyed listening to some of these. I've made my way through a lot of them, not terribly carefully listening just yet, but I feel like there's a lot there for me to still explore, Steve.
Yeah, there is. There's a lot there, and there's a lot of back catalogue as well to get through. But there's actually 2 books for Mark, Steve. I don't know whether the Mastering the Market Cycle is his newest one. Is also the most important thing, which is great because it's about 12 things, and none of them the most important thing. They're all very, very important. So, but yeah, it's a really good book. And the thing about Marx is he's got a sort of a good sense of humour as well. And that, even though he contains it in his letters, it still comes through at times when you're listening to him. So, I really, really enjoy this memo. I really enjoy the discussions. I enjoy having it read to me, and I enjoy the Q&As at the end where his writer is really, really good at teasing the little bits of information at you. But What Really Matters is probably a good one to start with, Steve. We both quoted from What Really Matters, but there's some brilliant little clips in there. I mean, he pulls out Bill Miller saying, "Time, not timing, is key to building wealth in the stock market," and that is that, timing the market beats timing the market. But there's just so many great things in there about him arguing with people over short-run positions and talking about a consultant accusing him of not earning his fees. And he said, really, my job is to assemble a great portfolio. It's not to trade in and out of things as and when it comes. But yeah, he's got some really interesting points on things. His general rule is to look for 9% on a bond or something like that, where he's certain that the person will be able to repay the debt, or he's fairly certain they'll be able to repay the debt, and the downside is somewhat limited. But maybe because if they don't pay the debt, the assets are still worth something. So he's a very interesting investor. He's a very interesting fellow, and like I say, I recommend highly to anybody who's looking for a new podcast.
Yeah, I imagine all of our listeners are looking for a new podcast at about this point. But I say that most of them, apparently, according to YouTube, don't make it to minute 37.